Hello ladies and gentlemen, Greg McCloskey from ForexLive.com. This is the Kickstart video where I take a look at three of the major currency pairs, the Euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective in my own voice. So let's get started. We saw the Euro versus US dollar move lower yesterday, and in the process we fell below this swing area. This swing area is defined by 1, 2, 3 separate lows here, forming this triple bottom within, a 5 or 6 pip trading range. Each of the time the price bounced, and then really bounced to the upside, never returned to that level until yesterday where it broke below that level. Now in trading here today, in the early Asian session, the price high came up toward the low of that swing area. And what do? We found willing sellers against the old floor right here. That's what you expect if the sellers are to remain more in control. If they aren't in control, the price would have moved back above that, and we'd probably see a different picture here. But what we did see was a rotation to the downside as sellers remained in control and pushed down to this yellow area down here. Now, what's the significance of this yellow down here? We'll have to go back to these lows right here, going back to April. These are the lows for 2024. We had low here, low here, low here, low here. All these lows are coming in, forming this this floor back in April, and that's where the price lows today bottomed in trading here today. We moved right back down to that swing area. I'll move forward here. We came right back to that swing area, and we have found some support buyers against that level. Why? Because risk can be defined and limited against this level. If you buy here at 1.0606 and the price goes below 1.0600, starts trading in the 105 handle, you get out and you lose a small amount. If the price bounces off of that level, like it's doing right now, currently trading at 1.0617, thereabouts, then you have the potential for the price to move back higher and maybe even gets back to this old floor right here. So you're risking a little to make more than a little, and that's what good traders do. Traders look at old levels and try to lean against those levels. That's what it's about. It's about leaning. So we're seeing some cause for pause at the lows from 2024. If the price were to break below the 1.06 level and start to trade in a 105 handle, then I would expect more selling to continue. Absent that, and the dip buyers are in play, and we could see a rotation to the upside on upside probing in trading here today. We will see, but that battle and that is on after reaching that target. Let's take a look at the dollar versus yen next. And if we look at it off of the 4-hour chart, the price moved higher in trading yesterday with the dollar buying. We moved up to this swing area here. The one level I want to bring to the forefront is this high right here. It came in at 153.88. So did this high and this high. Well, within a pip or so of that 153.88 level. In trading yesterday, we moved just briefly above that level and then spent the rest of the New York session within this yellow area here, which is defined by different this swing high and these highs, so on and so forth. And we also stayed above the 61.8% retracement of the move down from this high to this low right here. So that kept the buyers more in control in trading here today. We tried to move lower, and we did test that 61.8% retracement, but we did find the willing buyers against that level, leaning against that level, and forced the price back to the upside. We are currently back above this swing area, and what is our next target? Our next target comes against this swing area up here between 154.54 and 155.09. That level corresponds with different swing lows through here, here, and swing highs through here, and here before moving to the downside. So that area would need to be broken on the top side to increase the bullish bias. If you can't get above that level, if you move up to that level and traders lean like we did last week right here, we could see a rotation back to the downside. Last week's low came right down to the 100 bar moving average on the 4-hour chart. So, there are levels in play. One is a 61.8, and then we have this swing area up here. Get above 154.54, and we'll see if the price can stretch further to the upside here toward the high of that swing area at 155.09. Finally, let's take a look at the sterling versus US dollar. And what we're seeing in the price action this week is a move to the downside, and that momentum has continued in trading here today with the price falling below the last 2 weeks low prices through here, also below this swing area defined by different swing lows and swing highs going back to this level. This was the original support that was broken last week and failed on the break and on this break right through here. So I kept it in play right through here. But as you can see, we fell below that swing area. We also fell below the low from last week. And also, look at this high right here. This high stalled right near the low from last week. So the sellers are keeping a push on the market. If the price can stay below the 128.33 level, that's what this low is, then the sellers remain in firm control. Also in play is this 200-day moving average. This 200-day moving average comes in at 1.28178, and we are currently below that level after trading above and below it after breaking below it earlier today. So the sellers are making a play here. We're below the 200-day moving average. We're below the low prices from the last 2 weeks. We're below this swing area and also the 50% retracement. All these things are in play, which are bearish bias tilts. On the downside, we have this swing area down here, which goes back in time. I'm going to have to look at that closely to see if it really makes sense. And then we'll look toward the 61.8% retracement. That's probably the next major target on the downside at 1.27322. So that's my look at the three major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.